Obamacare Bailout Plan for Insurance Companies, Bailing Out Health Insurers and Helping Obamacare. Robert Laszewski, a prominent consultant to health insurance companies, recently wrote in a remarkably candid blog post that, while Obamacare is almost certain to cause insurance costs to skyrocket even higher than it already has, insurers won't be losing a lot of sleep over it. How can this be? Because insurance companies won't bear the cost of their own losses, at least not more than about a quarter of them. The other 3/4 will be borne by American taxpayers. For some reason, President Obama hasn't talked about this particular feature of his signature legislation. Indeed, it's bad enough that Obamacare is projected by the Congressional Budget Office to funnel $1.071 trillion over the next decade, 2014 to 2023, from American taxpayers, through Washington to health insurance companies. It's even worse that Obamacare is trying to coerce Americans into buying those same insurers' product, although there are escape routes. It's almost unbelievable that it will also subsidize those same insurers' losses. But that's exactly what it will do unless Republicans take action. As Laszewski explains, Obamacare contains a reinsurance program that caps big claim costs for insurers, individual plans only. He writes that in 2014, 80% of individual costs between $45,000 and $250,000 are paid by the government by taxpayers, for example. In other words, insurance purchased through Obamacare's government-run exchanges isn't even full-fledged private insurance. Rather, it's a sort of private-public hybrid. Private insurance companies pay for costs below $45,000. Then taxpayers generously pick up the tab that their president hasn't ever bothered to tell them he has opened up on their behalf for 4/5 of the next $200,000 plus worth of costs. In this way, and so many others, Obamacare takes a major step toward a government monopoly over American medicine, single-payer, that liberals drool about in their sleep. Laszewski adds, the reinsurance program has done and will continue to do what it was intended to do: help attract and keep more carriers in Obamacare than might have otherwise come. Thus, Obamacare is being aided by having taxpayers subsidize big insurance companies' business expenses. Who could ever have guessed that big government and big business might be natural allies? But, amazingly, it doesn't stop there. Laszewski writes that Obamacare also contains a risk corridor program that limits overall losses for insurers. So insurers not only don't have to pay out all of their costs, they also don't have to swallow all of their losses. Laszewski explains that if an insurance company expects its costs in a given year to be X, and those costs end up being more than X plus 2%, taxpayers will come to that insurance company's rescue thanks to Obamacare. In fact, once an insurance company covers that initial 2% in unexpected costs, taxpayers will cover at least 80% of any additional costs the insurer accrues. Laszewski provides a couple of examples to help illustrate taxpayers' unwitting generosity toward these participating health plans. Plans sold through Obamacare's government-run exchanges. If the health plan has costs at 110% of the medical cost target, the costs that the insurer expects to accrue, it will be responsible for only 102.4% of the target. A 2.4% shortfall, only about a quarter of its losses. If the health plan's medical costs come in at 120% of the expected claim cost target level, the health plan will only be responsible for 104.4% of the target. A 4.4% shortfall, again only about a quarter of its losses. It's actually only about a fifth in this example, as taxpayers would cover 78% of the losses, with the insurer covering just 22%. Read page 2 of the article with the link below.